Welcome. This briefing provides a formal analysis of Australian activity statements. We will examine their purpose, structure, and function for business tax reporting based on the provided source materials.
Our analysis will proceed through 5 sections. We will begin by defining activity statements. From there, we will examine the reporting requirements for goods and services tax, followed by the pay-as-you-go system. We will then briefly cover other applicable taxes and credits before concluding with installment notices.
So let's begin with Section 1, understanding the fundamental purpose and function of the business activity statement, commonly referred to as the BAS.
The Business Activity Statement is the official form used by businesses to report and pay several key taxes. The Australian Taxation Office, or ATO, automatically issues a BAS to businesses once they are registered for an ABN and GST. The form consolidates reporting for GST, pay-as-you-go installments, PAG withholding, and other tax obligations.
Let's move to our second section, which details the reporting of goods and services tax, or GST, on the activity statement.
GST is defined as a 10% tax on most goods and services in Australia. The BAS serves a dual purpose for businesses in this regard. It is used to remit the GST collected from customers and also to claim credits for the GST paid on business-related purchases and expenses.
Here we can see an example of the GST section from an activity statement. The specific labels and boxes you are required to complete are determined by your business's GST turnover, a critical factor we will now address.
The key figure to be aware of is $10 million. This figure represents the GST turnover threshold that dictates which reporting method a business is required to use.
There are 2 distinct reporting methods. As the source material specifies, if a business's GST turnover is below $10 million, it uses the simpler BS reporting method by default. However, if turnover is $10 million or more, the business must use the more detailed, full reporting method.
The simpler BAS method requires reporting on just 3 labels. These are G1, representing total sales, 1A for the total GST collected on those sales, and 1B for the total GST credits being claimed on business purchases.
Now, for the full reporting method, this requires a more detailed breakdown. In addition to the standard labels, businesses must report export sales at G2, other GST-free sales at G3, and must also differentiate between capital purchases at G10 and non-capital purchases at G11.
After determining your reporting method, there are 2 procedural choices to make. The first is your completion method, and the second is your accounting basis.
Let's compare the 2 completion methods. The calculation worksheet method provides a structured, step-by-step process for determining GST amounts. The accounts method, by contrast, involves transferring the relevant figures directly from your own business accounting records or software.
Next, the accounting basis, which is about timing. Under a cash basis, GST is accounted for when payment is physically made or received, a method typically suited to smaller businesses. Under a non-cash or accruals basis, GST is accounted for in the period an invoice is issued or received, regardless of when payment occurs. This method is mandatory for most larger businesses.
We will now proceed to the third section of our analysis, reporting pay-as-you-go. This system is comprised of 2 distinct components, PAG installments and PAG withholding. PAG installments are a system of regular prepayments towards a business's expected annual income tax liability. This system avoids a single large tax bill at the end of the financial year. The final liability is reconciled upon the assessment of the annual income tax return.
There are 2 options for calculating these installments. Option 1 is the installment amount, where a business pays a fixed amount calculated by the ATO. This is suitable for businesses with stable and predictable income. Option 2 is the installment rate, where the business calculates its payment by applying an ATO-provided rate to its actual income for the period. This option is better suited for businesses with fluctuating income.
This example shows the relevant section of the activity statement. You can see the fields corresponding to Option 1, the installment amount, and Option 2, where the rate and income are reported to calculate the payment.
The second component is pay-as-you withholding. This is the legal obligation for a business to withhold tax from payments made to employees and other specified payees. These withheld amounts are then remitted directly to the ATO.
And here is the corresponding section on the BAS form. Businesses must report the total salaries and wages paid, along with the total amount of tax that was withheld from those payments during the reporting period. We move now to our fourth section, which covers other, more specialized taxes and credits that may be reported on the BAS.
These additional components include fringe benefits tax installments for non-cash benefits provided to employees, luxury car tax, which applies to the sale of high-value vehicles, wine equalization tax, a specific tax for the wine industry, and fuel tax credits, a credit available to eligible businesses for the fuel tax included in the price of fuel.
In our final section, we will discuss installment notices, an alternative to the full BAS, and then summarize our key findings. According to the source material, some businesses may receive an installment notice instead of a BAS. The conditions for this are threefold. The business must report and pay quarterly, it must use the fixed installment amounts provided by the ATO, and it must have no other taxes or credits to report. It is a simplified reporting mechanism.
This brings us to our concluding question. What is the primary function of the business activity statement? As we have seen, its core function is to consolidate and streamline the reporting of multiple regular business tax obligations into a single periodic form. It serves as the central instrument for managing a business's tax compliance with the ATO.